Good day to Madam Aida. I'm Palaki Sivana from 21F01, and with me my other member, Muhammad Farhan, Lee Goliang, Nur Shazwin Natasha, Stewart Tang, Nur Shazwani Ahmad, and Nur Shazia. We're going to present on the strategy audit of our chosen company, Fintech Global Berhad. To begin, I'll be presenting the current situation and corporate government transformation in Fintech Global Berhad. Fintech is a Malaysian investment company holding and listed on the AIM market. It operates in fintech, biotech, healthtech, and group manufacturing, focusing on high growth and sustainable sectors. In 2024, fintech made a strong financial recovery, posting a profit of 23.19 million compared to a loss of 32.5 million in 2023. Revenue growth by 70%, supported by demand for marketable security and tighter cost control. The company now holds 240.8 million ringgit in assets, showing improved stability and liquidity. However, Fintech still depends heavily on security gains and some of its core business segments underperform. But it has future potential in microbial-agriculture, Fintech, and ESG-aligned innovation. On corporate governance, Fintech is undergoing major reforms. The board will aspire more independent and ESG experienced members. Executive bonus will be fairly present tied to ESG goals such as carbon reduction and diversity. The new sustainability community and whistleblower system will be introduced. These changes align with Bursa standards and global best practice, help fintech rebuild trust, improve transparency, and become more future ready. Thank you.
Now, I will present the key highlight from Chapter 3, which is the external environment, opportunities and threats, based on our SWOT analysis for Fintech Global Berhad. Let's begin with opportunities. Fintech is strategically positioned to benefit from several positive external trends. First and foremost, its subsidiary, Group Asia, is tapping into the eco-agriculture movement by expanding microbial soil supplements that help reduce chemical inputs while boosting crop yields. This aligns well with UN Sustainable Development Goals that particularly around climate action and responsible consumption. Another major opportunity lies in post-COVID-19 health awareness, which continues to drive demand for PPE. Fintech Glove Medela brand, with a production capacity of over 28 million boxes, serves diverse sector and has recently gained strong interest from US buyers. Additionally, Fintech's investment in fintech, robotic, and smart vending through companies like NetX and DGB Asia offer exposure to Malaysia's growing digital economy. Notably, Fintech's low debt position allows for reinvestment in R&D and market expansion without financial strain. Its recent participation in international events such as APIC 2023 also opens doors to new market and global buyers. Now, moving to threats. The most pressing external threats include climate-related agricultural disruption and rising energy and water costs, could affect both microbial fertilizer production and glove manufacturing. Geopolitical instability, post-COVID supply chain disruption, and intense competition in all of fintech sector also pose ongoing challenges. Additionally, fintech face regulatory complexities, especially in fintech and compliance standard. The threat of substitute products in both the eco-fertilizer and PPE sectors add further pressure on pricing and differentiation. In order to manage this risk, we develop a priority matrix that identifying climate impact and cost pressure as both urgent and high impact. However, the overall IFAS metric score of 2.78 reflect that fintech is operating in a favorable external environment where opportunities significantly outweigh threats. In conclusion, fintech must act fast to capitalize on emerging opportunities like health-focused exports and green agriculture while mitigating risks through innovation, compliance, and strategic investment.
Let me share an overview of Fintech Global Berhad key internal strengths and weaknesses. This factor highlight what the company is doing well and where there are important areas to improve. Strength 1. Diversified business portfolio. Fintech has a diversified business portfolio. The company operates across several sectors, including agriculture, biotechnology, glove manufacturing, financial technology service, and smart vending solution. This variety is important because it reduces the risk of relying on any one industry for revenue. If market conditions become challenging in one area, income from other sectors can help balance the impact. This diversified model makes fintech more resilient and adaptable to changing trends. The second one, which is the strong liquidity and low debt. Fintech benefit from strong liquidity and very low debt. As of the year latest financial year, the company had no outstanding bank borrowing and maintained substantial reserve in marketable security. This strong financial position gives Fintech flexibility to invest in new projects, fund innovation, and respond to unexpected challenges without the burden of heavy loan repayment. It also supports long-term stability and build investor confidence. The first one is the heavy dependent on marketable securities. However, there are also clear weaknesses. One is the major issue is fintech heavy dependent on marketable securities, trading for income. A large share of the company revenue come from gain in financial market rather than from its core business activities. This independence makes earning unpredictable and exposes fintech to the sudden losses if market value decline. It also raises a concern about the sustainable this revenue model will be over time. The second one is the limited revenue from core businesses. Another weaknesses is that the company core business statement, like a glove manufacturing and biotechnology currently, generate only a small portion of total revenue. Even though fintech has invested heavily in this area, it has struggled to convert those investment into consistent, profitable operation. This limit the potential for growth and create a pressure to improve execution and commercial performance. For the conclusion, while the fintech diversified investment and strong liquidity are valuable strengths, addressing the over-reliance on securities trading and improving the profitability of its main businesses are critical priorities for the future success.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Naziha binti Rabian, and I will be presenting chapter 5, which is analysis of strategy factors for our project. We will be focusing on the SWOT analysis and the S-FAST table in Fintech Global Berhad. So let's begin with the SWOT analysis. Fintech strengths include oversized business portfolio, strategic investment in niche sectors, strong financial liquidity, a diverse and experienced management team, and a clear commitment to ESG and sustainable development goals. So this internal strength gives the company a solid foundation to grow and adapt in an evolving market. On the other hand, the company also faces several weaknesses, which is included overdependence on marketable securities for income, and then high impairment and operational losses, limited revenue from core business segments, operational delays, and high fixed administrative costs. These internal challenges create vulnerabilities that need to be addressed. Looking for at the external opportunities, fintech can leverage growing interest in micro soil supplements, rising post-COVID health awareness, and new technology investment in areas like fintech and robotics. Additionally, its low debt position opens the door for the investment and growth. However, external threats are also significant. These include climate-related agricultural disruptions, rising water and energy costs, Southeast Asia climate risk, threats from substitute products, and environment risks to overseas assets. The SWOT strategy shows that while fintech in a good position to grow through innovation and sustainability, it must also urgently address the internal inefficiencies and external environmental risks. By matching its strengths and opportunities, it's mitigating its weaknesses against threats. The company can remain competitive and future-proof its operation. Next, we will move on the S-FAST table, where each factor from the SWOT analysis is given weight and rating. Rating range are from 1 to 4. 4 represents for superior strategic advantage or well-leveraged opportunity, while rating 3 shows above average, comforts but with room for improvement, while rating 2 indicates an average and a moderately concerning issue that requires more strategy focus. For instance, Fintech's diversified portfolio and strategic investment were rated 4 due to the strong impact on growth and risk mitigation. The company's commitment for fintech and robotics and received high scores, reflecting alignment with the long-term trends. Meanwhile, areas like hair impairment losses, reliance on marketable securities, and Southeast Asia climate risk were rated 2, showing moderate concern and the need for more effective strategies. In conclusion, as fast metric reveals that fintech is currently doing well in leveraging its strength and emerging opportunities, particularly in tax and ESG alignment. However, the company um, must strengthen its core business operations, reduce reliance on volatile income sources, and implement stronger risk management frameworks, especially for the climate and environmental issues. Overall, fintech is strategically positioned to grow if it takes proactive steps to improve internal operations and manage external threats more aggressively.
My name is Nur Shazwani Akmal binti Nur Afandi. So today I will outline fintech strategic direction based on the TAOS matrix analysis. First, the top strategies selected are Strengths Opportunities 2, which is focuses on leveraging fintech's existing strength in niche industry investments, particularly in technology-driven sectors, and aligning it with external opportunities in technological innovations. Next is Strengths Threats 2, which is combines fintech's strong investment prospects and sustainability commitments to counter external threats such as high utility costs and water shortage in industry like glove manufacturing. And lastly, Weakness Threat 2, which is addresses fintech over-reliance on volatile syllable securities and past operating losses by implementing a systematic risk management framework. So this focus on leveraging technological innovations, mitigating operational risks, and managing capital market volatility. For strategic alternatives, fintech can adopt corporate strategies like growth, expanding into robotics and fintech, or differentiation, offering unique products such as halal e-wallets and AI farming systems. Functionally, marketing will build strong B2C branding, while HR will upskill employees in ESG and automation. Our recommended strategy integrates growth at the corporate level, differentiate at the business level, and align functional strategies. This approach stabilizes finances short term by reducing reliance on volatile securities and positions fintech as a leader in ESG and digital trends long term. Key policies include R&D investment, ESG-linked executive compensation, and regular risk assessments. This strategy strengthens fintech's core competencies in diversification and ESG innovation, enhancing its market position.
Hello, I am Stuart Tanglesian and I will present the implementation and evaluation and control for Fintech Global Berhad's recommended strategies. The first strategy, SO2, Strategic Partnerships in Robotics and Fintech, focuses on forming collaborations with high-potential startups. To implement this, Fintech should set up a dedicated investment and partnership task force within the corporate strategy team. The team will identify suitable partners, particularly those in smart vending, automation, and Sharia-compliant fintech. Implementation will start with small pilot projects to test scalability and market acceptance before scaling up. Fintech will also need to establish clear partnership KPIs, including revenue contribution, market reach, and in return on investment, to track the progress effectively. The second strategy, ST2, energy saving and water recycling technologies, require upgrading Fintech's glove manufacturing operations at the Chermo facility. This should begin with an energy audit to identify where there are inefficiencies. Fintech must also engage technology vendors with proven experience in energy-saving equipment and water recycling systems. Throughout this process, Fintech's ESG committee should monitor the progress to ensure alignment with sustainability goals. The third strategy, WT2, strengthening the risk managing framework, involves tightening investment policies, reducing exposure to high-risk securities, and shifting focus towards more stable income sources like glove exports and microbial product sales. This also includes forming a dedicated risk management committee to conduct quarterly reviews and stress testing. Regular training on financial governance and investment risk will further strengthen this approach. Moving on to evaluation and control for Fintech Global, each strategy will be tracked using specific performance indicators. For SO2, Fintech will measure the number of partnerships, revenue growth, and ROI on a quarterly basis. For ST2, key metrics will include reductions in utility costs, water recycling rates, and ESG performance reviewed semi-annually. And for WT2, Fintech will monitor revenue diversification, financial stability, and reduce reliance on marketable securities with quarterly financial reviews. For control mechanisms, Fintech should conduct quarterly strategy review meetings to track progress and correct any deviations. ESG performance should be independently verified by third-party auditors such as KPMG, with executive bonuses tied to achieving ESG targets, reinforcing leadership accountability. Periodic financial audits and the establishment of a whistleblower platform will also further strengthen governance and ethical practices. Finally, Fintech must be flexible in its approach. Scenario-based planning will prepare the company to quickly adapt to climate or financial disruptions. Dynamic budgeting will allow the company to shift resources to high-performing areas, and regular stakeholder feedback will ensure the strategy remains relevant and responsive to market needs. Thank you.